As I record this, it's March of 2022, and it's no secret that we're in the middle of one of the hottest home purchase markets ever. And every time we see a trend that points to all of this finally calming down, something happens to make it burn even hotter. With supply at historic lows, homes for sale aren't easy to come by, and home buyers are facing competition everywhere they look. So when you find the home, you want your offer to be as strong as possible. To do this, many real estate agents are advising their buyers to waive certain contingencies, also referred to as purchase contingencies or real estate contingencies. These contingencies are an out or a walk-away clause that allow you to back out of the deal with no penalty. You get your earnest money deposit back and everyone is happy. Well, the seller might not be happy, but you are, and that's what's important here. Now, these can be a little tricky, and many buyers, especially first-time buyers, aren't familiar with how important they can be. I'm Mike Ferrossi for Super Loans, and today we're going over the most common types of home purchase contingencies, what they are, and what happens when you waive them. The first one I want to go over is one of the most important, and that is the inspection contingency. A home inspection contingency lets you ask for repairs or renegotiate the sales price, or walk away from the sale completely based on the home inspection results. Your contract may include that repairs must be made if problems are uncovered. Getting these things fixed will probably delay closing, and it's usually worth the wait. If you don't want to wait, you'd have the option to renegotiate the sales price instead. This typically happens with larger repairs that could take a while to get done. If you don't include an inspection contingency in your offer, it will make the offer more competitive. But beware. The reason the offer would look better is because it benefits the seller more than it benefits you. Waiving the inspection contingency means that no matter what the home inspector finds, huge problems with the roof, plumbing, electrical, even foundational issues with the structure, you don't have an out. You need to go through with the purchase anyway and fix all those things yourself after closing, or back out of the deal and forfeit your earnest money deposit to the seller. Now, I'm not saying that you shouldn't ever waive the inspection contingency. Some buyers have had success this way. Only minor things were uncovered and everybody was good. But you should be aware of the risk you take on if you waive the inspection contingency. I honestly believe this is the most important contingency of them all. Uncovering things that are otherwise hidden is something that can really only be done by a home inspector, a professional, reputable home inspector. So consider this carefully and be sure to talk to your real estate agent about it before submitting your offer. Next on our list is the appraisal contingency. When you use a mortgage to buy a home, your lender requires a home appraisal. With a standard 3% down payment mortgage, the lender will give you a loan of up to 97% of the purchase price or the home's value, whichever is less. This is why they need the full home appraisal in addition to the purchase price that was agreed upon in the contract. Typically, this is no big deal, but in a hot purchase market, it's not uncommon to see sellers listing homes above market value or seeing buyers offer more than market value in an effort to get their offer accepted. In this case, the appraised value of the home may come in lower than the agreed upon purchase price of the home. Maybe you offered to buy the home for $400,000, but the appraisal says the value is only $380,000. That's a $20,000 difference. What happens then? If you have an appraisal contingency, you have choices. If you have the money and you still want the home at that price, you can pay the $20,000 difference out of pocket and move along with your purchase as if nothing ever happened. You can also ask the seller if they want to renegotiate the purchase price down to match the $380,000 appraised value. Depending on the market at the time of purchase, they may or may not be willing to do this. Or you can cancel the deal penalty-free and get your deposit back. The contingency gives you that option. If you don't have an appraisal contingency, you have the same 3 options, but they work out a little different. You can pay the difference out of pocket. That's always an option regardless of contingencies. You can also ask the seller to renegotiate the purchase price, but because you don't have that get out of jail free card, they'll typically be less likely to negotiate with you. And if those 2 options don't work out, you can still cancel the deal, but the seller keeps your deposit. Appraisal and inspection contingencies are both powerful, and they can save you a lot of money. Up third is the mortgage contingency. This gives you an out if you aren't able to qualify for your mortgage. Now, this doesn't happen often, and I know that all of you are prepared buyers who came to the house hunting party armed and ready with your full mortgage approval. In case you don't have one, go to superloans.com for a great rate and a simple pre-approval. But things can happen. Credit events and financial changes happening after pre-approval but before closing aren't unheard of. If this does happen to you and your loan doesn't go through, the mortgage contingency is your protection. If you don't have a mortgage contingency, it's kind of like adding insult to injury, because in addition to the loan and the home, you'd also be losing your earnest money deposit. The last major contingency I want to cover is the home sale contingency. This contingency is for non-first-time home buyers specifically, and it says that your offer is subject to the successful sale of your current house, typically within 30 to 60 days of your offer on the new home. In a slow or buyer's market, this could give you some added security. But in a hot market where properties are selling quickly, this contingency would put your offer at a serious disadvantage. You're asking the seller to wait to sell their house until you sell yours. Most sellers won't be willing to do that. There are other contingencies too, like termite certification or an expiration date specifying that the transaction has to close by a certain time. Contingencies are excellent tools to help buyers, but you might not want to go overboard when you submit your offer. The more contingencies you include, the less likely a seller will be to accept. It's important to strike a balance between protecting your own interests and presenting an enticing offer that represents you as someone who's easy to work with. Sometimes there's so much competition that buyers feel compelled to include no contingencies at all in their purchase offer. Is this the right thing to do? Buying a home is a big investment, so I tend to lean towards no, but every situation's different. This strategy has worked out great for some, and it's really burned others. Only you, with the help of your real estate agent, can know for sure. And now, you know what all these contingencies are, as well as the risks involved with waiving them, so you're on the right track. This video included lots of mortgage and real estate industry terms, some of which can be a bit confusing. Check out this playlist, which is our ever-growing library of mortgage and real estate terms explained in under a minute. And head over to superloans.com for all your mortgage needs. Because with Superloans, great rates have never been so simple. See you next time.